Another strong jobs report, and Hecla acquires Alexco. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Paul Harris is out, but with us is Duncan Wood. He's Vice President for Strategy and New Initiatives at the Wilson Center, a Washington, D.C. based think tank. He wrote a big report on securing America's supply of critical metals. Duncan, welcome to Kitco.
Thanks for having me.
We will talk about the findings of your report a little bit later, but maybe tee us up. Why did you write the report and what were you addressing?
Well, the reason behind the report was just to try to complement the work that was already underway from the Biden administration on the subject of how to strengthen and make more resilient America's supply chains in a whole range of areas. So, in addition to critical minerals, we're looking at semiconductors, electric vehicles, and the healthcare sector. And what we're trying to do is to engage with stakeholders from across the spectrum, from the private sector, from government, and from civil society think tanks, to try to come up with novel and innovative policy solutions for the challenges that we've faced, not just since the beginning of COVID, but really in the context of major geopolitical changes that are underway in the global economy.
Let's have that discussion, Duncan, because that's really been a strong theme that has been running, I think, for about the last 2 years, whether you see it addressed in Linus or maybe some of the other major producers in the critical metal space. First, though, let's talk about macro, and that's jobs report. It was a strong one. The key non-farm payrolls came in at 372,000 versus market expectations of 250,000. That follows from last month's strong job numbers. Gold dipped a bit. U.S. Treasury yields rose. The rising of the U.S. bond yields late this week suggests that the marketplace is putting inflation worries back closer to the front burner of the marketplace and maybe on par with recession worries. As of this recording, noon on a Friday, gold is in the mid 1750s. Arguing against the inflation thesis was oil, which dropped below $95 a barrel this week, although oil is now back above $100 a barrel. Copper, well, it's just been really terrible, losing nearly $1 this past month. It is currently trading at $3.50 a pound. It hit a 17-month low, again, a 17-month low earlier this week. The big mining news was Hecla Mining acquiring Alexco Resources. Hecla touts its North American roots, separating it from other silver miners with operations predominantly in Latin America. Alexco is based in the Yukon and started operations about 2 years ago. Investors didn't love the deal, shaving 11% from Hecla when the deal was announced. Rio 2 was dealt a blow when its Phoenix Gold project in Chile failed its environmental assessment. The company said it's evaluating its options. The company was down 70% this month. And some good news, Asante poured its first gold at Bibilani mine in Ghana. It's eyeing production of 175,000 ounces over the next 12 months. Duncan, I'd like to bring you back. You authored Mosaic Approaching, looking at critical metals. There's been a buildup in concern around commodities and materials with overly concentration in one country. Let's start with principles first, Duncan. What is the criteria? What makes a commodity like rare earths, or making a service, or I should say a material like semiconductors? What makes them vulnerable?
Well, the vulnerabilities that we can see in the supply chain for critical minerals at this point in time are largely due to the fact that demand is increasing very, very rapidly for a lot of these critical minerals, largely because of the energy transition that we're seeing taking place, and in particular because of the ambitious plans from the auto industry to increase the sales of electric vehicles. The second perspective, or the second reason why they're vulnerable, is because in many countries, such as the United States, the extractive industries have been neglected for many, many years. And so whilst there has been significant development of resources, in-ground resources in other parts of the world, here in the United States and many other countries, in particular in Europe, we just haven't seen that same level of investment. The third reason, and this follows directly from the second, is that we're seeing supply in the form of extraction, but also in the form of processing and refining of these critical minerals, highly concentrated in a small number of countries. Now, we're all aware of the importance that a country like the Democratic Republic of the Congo has in the production of cobalt, for example. But when we begin to look at where minerals such as cobalt, lithium, nickel are being refined and processed so they really can become useful for the manufacturing process, we see that China is playing a major role there in terms of concentrating getting a stranglehold on the supply of those goods to manufacturing.
Duncan, there's a lot that I want to address in there. Maybe first we could just talk about the top criteria. The criteria you mentioned at the top was around energy transition. But I think you did mention semiconductors in there. I just am interested in, once again, kind of defining the criteria around vulnerability, for instance. I'm going to throw a flip example. So, for instance, you would have cocoa that's concentrated in one country, or you might have vanilla that is going to be concentrated in Madagascar, for instance, as well. But again, is there particularly something that about these industries, or something that is actually that's making these making either semiconductors or critical metals being identified as being strategic or being vulnerable?
Yeah, I think it's because of their applications to key technologies that really are essential for a modern economy to be competitive. It's also because of the heavy overlay of geopolitical concerns within there. And a lot of the work that we do at the Wilson Center, I've developed an approach to understanding supply chain thinking. It's been an evolution over the past decade in particular, from a focus just on value, which is trying to cut costs and getting things just in time production, etc. Which has been made possible by the existence of a globalized economy. From there, we've seen the gradual but steady introduction of what I would call values: environmental standards, social standards, governance standards, the classic ESG package. But then also looking at questions of national security, particularly in the aftermath of 9/11 and all the steps that have been taken to try to make supply chains more secure in terms of knowing what's coming through them. And then, of course, we had security from disruption of supply during COVID, where we saw a lot of the logistics breaking down. And then after the Russian invasion of Ukraine, we're seeing the injection of geopolitics. And of course, the Russian invasion of Ukraine is one element in the story. What most people here in the United States are much more concerned about is what happens if we do get heightened tensions between the United States and China, or if we were to see an economic decoupling between the two countries brought on, for example, by Chinese aggression against the island of Taiwan. What would that actually mean for the flows of all of these goods that we depend upon to manufacture smartphones, TVs, electric vehicles, etc., but which are so heavily concentrated in a country like China?
Can you talk about the underinvestment piece, Duncan? So we've heard for several years now, Belt and Road Initiative. We've seen the investment that China has been making. And then also, you just don't have to look at, you just can look at the mining indexes to see how unloved commodities have been for all this time. What's been the difference between China and its investments have been making and investments that have been coming out of North America in terms of commodities?
So again, I'm going to come back to sort of that supply chain paradigm and the evolution of it, which is that for many years, here in the United States, I think it's true in Canada and many other Western countries, in particular in Europe, you would see that there has been an emphasis on the high value added portion of the supply chain. In other words, research and design, putting together the final finished product and selling it on into the market. What we've neglected was the sort of initial part of the supply chain, where we get the goods out of the ground and do basic processing and refining of those goods. The Chinese, on the other hand, have a much more holistic and integrated approach to supply chain thinking. They understand that they need to control not just the high value added portions, but the lower value added portions at the beginning of the supply chain, if they're really going to have control over their strategic destiny, as it were. And so what we're seeing right now is a recognition, far too late, sadly, but a recognition that we've kind of dropped the ball for many, many years. And now is a time when we actually need to get involved in the extractive industries. The problem with that is that whilst many people recognize that we need to focus much more on extraction and processing, there are so many obstacles in place that prevent us from doing that rapidly. Here in the United States, for example, when we look at permitting in the mining sector, it takes on average 7 to 10 years to get a permit to open a mine. Compare that with Australia or Canada, where it takes on average 2 years to get the permits. And you can see why there has been underinvestment in the extractive industries. Now, there's movement on this issue. We're seeing legislation being put before Congress that will essentially represent a new approach to mining law. There will be attempts by the executive branch to streamline the permitting process. But there's a real problem here, which is that there's only so much the federal government can do because of the division of powers between federal, state, and local governments here in the United States. But also the culture of litigiousness in the United States, and of course the presence of NIMBYism. And the combination of those last two factors really does make it very, very difficult to streamline the regulatory process in a holistic way.
Aren't we also, is it also just a problem by, there just being too much population down in the US? I mean, it seems like mines get developed if they're kind of out of sight and out of mind, for instance. So I think it's something that are kind of in distant locales, or at least it's going to be a place where, people are very much used to mining. And I think of Quebec, for an instance.
I think both of those factors are really important. Density of population matters a great deal. But, here in the United States, there are still many parts of the country which actually are quite sparsely populated. But, look at Canada. Canada has, what is it? I forget what the percentage is, 80% of the population within 500 miles of the US border. And then you've got all the rest of that enormous territory. But of course, Canada has had to deal with a lot of these issues, in particular in dealing with First Nations and making sure that community rights are respected. In Australia, again, a sparsely populated country and continent, you have less local opposition, but it still exists. So I think that, it's not that this is easy to do. It's that, I think countries like Australia and Canada have found a way to do it. And part of the reason why is because of the second point that you made, which is that it's built into the culture. Canada sees itself as at least in part, a natural resource-based economy. And that's a very, very important part of national identity. Here in the United States, we've lost that. Mining is seen here as being a 19th century dirty industry that pollutes rivers and destroys the earth. And who wants to do mining? And then all of a sudden, given what's been taking place over the last couple of years, we've realized, but in fact, in order for us to meet our climate goals, in order for us to meet our national security and geopolitical goals, we actually do need to guarantee access to these critical minerals.
You've mentioned Canada. You've mentioned Australia. Which country has done a strategy around strategic metals that you see that have done well or fairly well? There was an announcement from Canada, for instance, some tax incentives that they were putting in. Australia certainly introduced, it certainly identified what are the key resource areas for critical metals.
I think you're right. I think both of Canada and Australia are taking the positive steps in this regard. The United States is moving, albeit very, very slowly. According to the latest version of the Defense Production Act, which was passed in response to the Ukraine crisis, another $500 million, slightly more than $500 million, were pushed towards the development of the critical mineral supply chain here in the United States. That's a tiny drop in the bucket of what's actually needed, of course. When you look at what the Europeans are doing, the Europeans have actually moved further and faster than the United States, pulling together a more coordinated approach to securing their supply chains. Perhaps I think the most important step recently, and this happened just a couple of weeks ago, was the creation of the Mineral Security Partnership, where you have Canada, the United States, the European countries, Japan, and Australia working together as almost in the form of a buyer's cartel to try to secure access to critical minerals from around the world, and then also to make sure that they cover the requirements in terms of processing and refining of those critical minerals between them, and then selling to each other. That has real potential. It's going to require ongoing work and collaboration between the countries, not just a one and done. But at least I think you begin to see the creation of a more coordinated response from Europe, the United States, Canada, etc., to the China challenge on critical minerals.
When did this come to a head, Duncan? I'm trying to go back. I mean, this predates what happened with Ukraine-Russia conflict, where we were looking at suddenly our oil looked a real threat. It seems to have kind of come out of, I would say, kind of in the pandemic and kind of during the Trump administration. But was there any particular trigger or any particular event where we started really focusing on awareness of this issue?
Well, it's interesting because the concern over supply chains, and in particular over critical minerals, you can trace it back to the Obama administration when they were looking at the minerals that you'd need for the energy transition. Then during the Trump administration, where there was a much more of an economic nationalist approach to trade and foreign economic policy, we began to see that focus as well, in particular on questions like semiconductors, where they saw that the United States was becoming vulnerable to Chinese dominance. And then during the COVID-19 pandemic, we've seen increased awareness of the really dangerous implications of a breakdown of the supply chain. But I think that the big triggering moment for the United States has been the announcement by companies like General Motors that they're going to move to 100% of their vehicle fleet being electric in the next 20 years or so. And of course, that target of 50% announced by the Biden administration, 50% of vehicles being sold should be electric by 2030. That means that, there's just a huge jump in demand for these critical minerals over the next, next 8 years. And if you look at what is actually out there being produced today, and you compare that with what the demand will be in 2030, if the United States does go to 50% of the vehicle fleet being sold that is electric, then there simply isn't enough out there in the world right now to cover that. So we need massive and very rapid development of new resources and processing and refining.
What metals are the most worrisome, Duncan?
Well, I mean, it all depends upon what your definition of critical minerals is. In the study that we conducted, we were incomplete and we didn't cover everything. But we looked at lithium, cobalt, nickel, rare earths, and we also included copper, because copper is such an important element in terms of electrification. And when we see what's going to be happening in terms of building out the charging network, when we see what's going to be happening in terms of the transition to renewable energy, copper will play a critical role there. But, the really big problems in the short term that I see, short to medium term, are to do with lithium, cobalt, nickel, and rare earths. And those are all areas where China holds a significant lead over the United States in terms of securing the supply chain.
Is there going to be anything different this before, Duncan? Because we have heard these stories about critical metals and just the concentration of rare earths. I mean, that goes back to early last decade, and then we had a run up in rare earth during that particular time. Is there something changed this time?
Yeah, I think it's that we now have a much clearer idea of what demand is going to be in the next decade. We also have definite policy commitments on the part of the current US administration, also in the European Union. But it's those corporate commitments which have been driven as much as anything by the preferences, the demands of shareholders and investors. So that ESG component once again coming in there. And I think that that's what really is different this time around. When I look at the debate here in Washington, it's extraordinary how many different groups are coming together. It's a bipartisan issue up on Capitol Hill when it's almost impossible to find any bipartisan issues up there. You're seeing business as well as environmental groups talking about the importance of doing this. And there's just got this incredible upswell of pressure on policymakers to come up with solutions for it. So I think that that's what's really different this time around, is that we're finally getting a handle on the urgency of it. Does that mean that policymakers are going to respond effectively? Who knows? Just a classic example from another sphere is what's taking place in semiconductors. For the past 9 months, we've had legislation in place in the US Congress to provide $52 billion in funding for semiconductors. But the bills or the legislation in the House of Representatives is different from the legislation in the Senate, US Senate. And they haven't been able to reconcile them and actually make the money flow for the past 9 months. That's problematical. The fact is that we have a political system here which faces serious constraints, and that really limits our ability to react effectively and rapidly.
Duncan, I think you missed one factor, and that would be Linus has had a couple of quarters where they've had a nice profit. So, with the support of rare earth prices. So that also is driving some interest and driving some investment into the rare earth space. Maybe let me just let you just finish on this point, though, Duncan, was what do you see that is concrete that's really positive in the space right now? That there's going to be some hope that things are strategic.
So, I mean, in addition to the fact that we're seeing so many people recognizing the importance of it, we are beginning to see movement in terms of providing funding for the sector. We're also seeing an extraordinary investment by the private sector in technologies designed to take better advantage of the critical minerals that we have access to. So, for example, battery technologies that reduce the total amount of cobalt needed in a battery by substituting for manganese, for example. Those kind of technologies, I think, are going to help us bridge the gap, maybe push the deadline out a little bit further, where we reach the point where we don't have enough critical minerals. I think we're also going to have to see a certain degree of pragmatism here. It's great that we have a target of 2030 for 50% of the vehicle fleet being electric. I think that we're probably going to have to push out a little bit more than that. Another piece of good news is that we're looking at the potential for recycling of battery metals. And we know that the average battery in an electric vehicle will last for about 10 years. So once we get to that level of 50% of the vehicle fleet being electric, 10 years from that point, we'll then have to have effective recycling processes in place, which involves a lot of infrastructure development that will enable us to take advantage of that resource that is already in the system. And because we have at least 10 years, probably more like 15 to 18 years to create that, I'm seeing a lot of folks in the space now bringing in investment, bringing in ideas, new technologies, and I'm seeing that there is a move towards creating public policy that will help that process. So I think we're going to see over the next 2 decades a partnership between the extractive industries and the recycling sector that will enable us to somehow put it all together and meet the targets that we need.
Let's turn to our number of the week. Guest goes first. Duncan, what's your number?
Okay, so my number is 42. And 42, of course, is famous because of The Hitchhiker's Guide to the Galaxy, which is, it's the answer to the ultimate question of life, the universe, and everything. But most importantly, it is the number of times that the demand for lithium will grow by the year 2040 over 2020 levels. So 42 times the demand for lithium by 2040 compared to 2020. And we all know that lithium is everywhere, but of course its concentrations and its quality as a resource varies enormously. So we're going to see massive investment into the lithium sector. Not all of those projects are going to be profitable. Not all those projects are going to be successful, but we will see that there'll be huge amounts of lithium flowing through the system. So that 42 number, I think, is the one that really drives me on a daily basis.
Let's keep with the strategic metals theme. My number of the week is 1 billion. Once again, that's 1 billion. Copper producer Codelco has announced it will begin construction on its long-delayed $1 billion desalination plant, that according to a report from Reuters. It's hoped that the plant, which has been delayed since December 2019, will help Codelco reach its target of reducing freshwater consumption by 60% as Chile enters its second decade of drought. In its note flagging the story, BMO writes that the Chilean copper production struggled to perform over recent years as a result of lower grades, challenging permitting requirements, as well as capex and environmental issues. That's it for us. Follow me at Michael McCrae. That's McCrae with 2 C's. Duncan, how would you like people to get a hold of you?
Please just check out our website. We've got an extraordinary resource there on supply chains. Go to wilsoncenter.org and you'll find it right there on the homepage.
And once again, the name of your report that people can put into their favorite search engine, Duncan?
The Mosaic Approach.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Duncan Wood and myself, have a pleasant weekend.